Let's get down to business now with Big Will Edwards. Big Will, let's start here in Europe, where ministers have signed off on an aid package for Spain's banks.
They have indeed, and what a big package it is too. 39.5 billion euros. Is that going to be enough to save the Spanish banking system? Well, according to analysts, in fact, they've been saying around 2 to 3 times that amount could be actually needed. So quite a conservative amount for the Spanish banking system. Of course, it won't be going via the Spanish government. It'll be going straight to the banks themselves because the government wants to avoid a bailout. And speaking of bailouts, actually, Eurogroup ministers meeting yesterday did also put off a decision on a bailout for Cyprus, but there are reports that that could equal up to 17 billion euros.
And yet, despite the Spanish troubles, French President François Hollande sounds pretty optimistic about the future of the Eurozone.
Yeah, he's sounded full of the joys of spring, actually. We'll take a listen to him. His words might come back to haunt him because he has been very optimistic about the Eurozone, saying the worst of the crisis is behind us. Let's take a listen.
There are no more doubts about the Eurozone. We could have wondered a few months ago if the Eurozone was about to implode or the exchange rates rocket, but look where we are at the year's end. Greece now has its support and its rescue plan. The uncertainty is gone. Italy will see its interest rates drop. Spain has obtained help for its banks. France's interest rates remain low and confidence has returned. So we have succeeded at this stage.
President Hollande was speaking in Lyon, where he signed an agreement with Italy to build a new high-speed rail link under the Alps. The project is intended to boost trade links between the two countries, but there are big concerns about where the money's going to come from.
Shaking on a project that's been coming down the line for nearly 20 years. President Hollande and the Italian Prime Minister Mario Monti have agreed to financially back a high-speed rail link between Lyon and Turin. It'll mean Parisians could get to Milan in just 4 hours, almost half the time it takes at present.
We have a commercial relationship. Italy is the second biggest consumer of our products and our third biggest supplier. And just for that reason, we need to have links which match that relationship.
Building the line will be no mean feat. 200 kilometres of railway and a 57-kilometre tunnel underneath the Alps. It's designed to reduce the pressure on roads from heavy-duty lorries and thereby cut CO2 emissions. The project has generated furious opposition, though, on both sides of the Alps, with demonstrators taking to the streets of Lyon as the accord was signed. Critics aren't convinced it'll have significant environmental advantages, and many complain the price tag is too high. In 2002, the French Court of Auditors estimated a new line would cost 12 billion euros. It now says it'll cost as much as 26.1 billion.
They want to build a new piece of infrastructure that will have 5 times less traffic than the Eurostar, but will cost twice as much to build.
Despite Hollande and Monti's enthusiasm for the railway line, it'll be a long time before they get to travel on it. The first trains are scheduled for 2028.
Next, that old rivalry between the UK and France has been simmering again, and this time it's over banking.
Yeah, London, of course, the financial capital of Europe, really, in terms of the amount of transactions that go through there. London's Mayor Boris Johnson, who you can see there, he's accused the head of France's central bank, Christian Noyer, who's turning up here. He said he's accused him of a naked attempt to steal London's financial crown. That's because this man said that there's no rationale for Europe's financial centre being outside of the Eurozone. Of course, the UK using the pound still rather than the euro. It's rather worrying times for the UK at the moment because the financial sector is its biggest industry, basically. And the Eurozone is hurtling towards banking union to try and get through the crisis. That causes a problem for the UK. It's not in the Eurozone. It can be outvoted by all the members of the Eurozone when it comes to pan-European regulation. So they're concerned that their banking, not monopoly, but their banking powerhouse could be taken away from them.
Next, Will, what's the news from the markets?
Well, it's been a bit of a bad day on the US markets. That closed on Monday firmly down. There was some disappointing data out on manufacturing confidence, a survey by the Institute for Supply Management. That was down to its lowest level since July 2009. Also worries about the fiscal cliff, that event which will see tax rises and spending cuts come in January the 1st unless a deal is made. A suggestion was put forward by the Republicans, but it has been rejected by the Obama administration. Let's take a look at Asia as well. Those worries continuing over in the Asian trading session, which is going on at the moment. But we're seeing a mixed picture with the Hang Seng and the Shanghai Composite managing to get up into positive territory.
Now, it's already cost the U.S. economy as much as $7 billion, and the White House has called for it to end. We're talking about a strike at the port of Los Angeles that has crippled the United States' biggest commercial harbor for over a week now.
Going nowhere fast, thousands of containers wait to be loaded and unloaded at Long Beach Port. The strike has stopped cargo shipments for a week now at a cost of billions of dollars. Instead, shipping companies are having to divert to harbors further up the California coast or to Mexico. The strike began when 800 clerical workers walked off the job in a dispute over the future of union-guaranteed positions. Some 10,000 other port workers have refused to cross the picket lines, forcing a shutdown at 10 of the port's 14 terminals.
The thousands of workers that are laid off and not working, the $1 billion a day of cargo that comes over these docks in this basin now aren't moving, and the impacts are huge.
Together, the twin ports of Los Angeles and Long Beach are the 7th busiest in the world. They handle $1 billion worth of goods every day, including 40% of US imports from Asia. The workers say the port operators want to reduce the number of union-protected jobs so they can outsource some of their positions to cheaper locations abroad.
We had 2.5 years with no contract. I mean, the jobs have been going left and right out of the country, and nobody's doing anything about it. Somebody has to step forward and say, we need to keep these jobs in America.
The mayor of Los Angeles has called for round-the-clock talks to resolve the dispute, while the White House has urged both sides to return to the negotiating table.
Well, this was only launched last year, but it seems that The Daily isn't going to be the newspaper revolution its publishers were really hoping for.
Yeah, Rupert Murdoch launched it to great fanfare last year. The Daily was the name of this digital newspaper. Only on the iPad it was available. The idea was subscribers could pay 99 cents a week to get copies every day. And, well, it hasn't done so well. In fact, the News Corp are saying now they are going to close it down after just over a year in business. It had a few problems. I mean, the fact that it didn't actually have a website, it was just an iPad app. That meant that articles couldn't be shared and linked to online. And also it didn't have such a trusted brand as many papers that are already out there. They're struggling to get people onto the iPads. And without a trusted brand, it's even harder, it seems.
Will, for the last story, tax evasion. What's the latest big company to be nailed for tax dodging?
Well, not nailed, we should hasten to add, but Dolce & Gabbana are in court. In fact, the trial of Dolce and Gabbana, the two designers themselves, opened on Monday in Italy. They're accused, at least, of avoiding 420 million euros in tax by setting up a shell company in Luxembourg, while they were in fact still operating the company itself out of Italy. That's according to prosecutors. Now, the case was dismissed in April 2011 when it last came to court, but Italy's highest court has ruled that the pair must now face trial again. They, of course, deny all charges, but this comes, of course, in the context of a number of other companies being accused of avoiding tax, if not doing anything illegal about it.
That was Business News with Will Edwards. Thanks, Will. Always a pleasure to see you. Stuart Norville is back in just a few minutes with more world news. Bye-bye.